Welcome back, guys. I found the most bearish bear for the economy on YouTube. He happens to be another Aussie, so I'm going to bring him out and we're going to have a good old-fashioned debate on what we think is going to happen in the economy for 2022. You know, my thoughts if you've been following the channel, looking at the 18.6-year cycle, but I think it's important to chat with other people that have differing views because we can always be wrong. So let's bring out Michael. Mate, how
Hi,
are you?
Jason. Good yourself?
Excellent. I'll just mention I saw Michael's channel. He's been doing a ton of content on YouTube, studying a lot, and I started trolling him in his comment sections. And this is how we ended up here to discuss the economy.
Yeah, that's exactly right. Jason's been trolling me. He said, "Yeah, I'm the biggest bear on YouTube." I like to think I'm just more of a realist. I'm not like some of these Lambo crypto boys on YouTube. I'm just going to tell you how it is, and I think we're heading for a recession. When things look bearish, I'll tell you look bearish, and that's the content I'm going to make. What I think is going to happen.
And I think I'm wrong in the sense that you're the most bearish bear, because obviously that title goes to Harry Dent.
Yeah, that's right.
You got to be calling bear every single month of the year for 10 or 20 years straight.
Yeah, and I'm not
But
calling for a 90% crash.
let's have a chat about the recession, looking at the recession that we have to have. If you want to follow Michael, check out the links in the top of the description. Michael invests and tries to make money. As we are Aussies, you know, we tend to have a bit of humor if you haven't been able to follow that. All right, Michael, introduce us to your channel, what you do over there, and then let's dive into the topic of the recession.
Yeah, fantastic. So yeah, on my channel, I just talk more about the macro side of investing. I like to talk about what's happening with the economy, what the Federal Reserve is doing, what's happening with interest rates, and what's happening with bonds, etc. I try to bring in the bigger picture, rather than looking at an individual stock, for example, or maybe an individual cryptocurrency. I try to look at what's the bigger macro cycle happening, and I use that to figure out what I'm going to do with my investments.
Interesting, because your macro cycles are slightly different to mine, but we do have a lot of similarities. Enough said, we'll get into that in the video. The recession we have to have. Let's start with the first thing, in case we're always asking what is a recession. Definition of recession, just so we have like a clear intros to what we are debating here.
Technical recession is just two negative quarters of GDP. But what I think is happening right now, we can get into later in the video, in real terms, I think we're already in a recession with inflation actually being higher than the GDP growth.
We're already in a recession, but technically we haven't got there yet, so it's not called a recession at this point. What happens once we hit a recession in your thoughts? We'll get to like the deeper stuff later, but if we are in a recession according to the news, is that it? What goes on from there?
What I think, what we can talk about what's happening now, because we're not technically in a recession now, but if you just look at the average, consumer right now, I guess you could say the middle class, the average American, the average Aussie, their purchasing power is getting destroyed. The latest CPI data just came out at 7.5%. We're seeing consumer credit is going up to all-time highs. Credit card debt is like $1 trillion in the US. We're seeing people's grocery bills are going up. So really what it is for, in real terms, for the average person, they feel like, they're going backwards. And that's pretty much is what's been happening over the past 40 years.
Prices are going up, their wages aren't keeping up. My thoughts were, which we've talked about as well on your channel, is the wages will go up because that's sort of where we're getting to. They're not able to find workers now. People are leaving their jobs and doing their other thing, similar to what happened at the peak of before or prior to the GFC. Wages started to go up a lot. People can't find their businesses, they can't find the employees, and then they have to start paying more to bring those people in, and that's what then gets us out. Have you thought about that as part of the macro picture?
Yeah, definitely have. If you look at the latest data, CPI 7.5%, but wages, last time I looked at it, were only up 5.7%. So yes, wages will go up, but they're not going up at the same rate as inflation. And remember, the way they used to record inflation in the 80s is very different now. The way they used to record inflation in the 80s, if we use that same methodology, you can look up shadow stats. They have a way of doing it. Inflation would actually be at 15% right now. And I think, if you go to a grocery store, if you look at housing costs, if you look at utility bills, there's a huge energy crisis going on in Europe right now. Energy prices are going to start skyrocketing in the US. There's no way inflation is only 7%.
If we get the recession, that will bring down all the prices, which is why we're talking here like the recession we have to have.
Yeah, the way I see it is there's no way the Federal Reserve can get out of this, scotch-free. Either they're going to have to lift interest rates to get inflation down, which will lead us into recession, or they're going to completely ignore it because, they don't want to pop the bubble, or for some reason, maybe the federal US government can't afford to repay high interest on their $30 trillion debt. But then if they don't do that, then this is going to make inflation worse. It could possibly lead to, borderline hyperinflation. And it's also going to cause huge unrest with the middle class because they're not going to be able to afford the basic, essentials like housing, food, and transportation.
If we get the recession, then that will clear out the craziness of all of the pricing going up, which will then start to slow things back. Do we actually need a recession to do this? Can the Fed, with their tools, whatever they have left, can they manage to get us through it? And is it really that bad if we do hit a recession for a brief period of time? So I threw two questions at you there.
Yeah, we do need a recession, and I don't think there's any way out of it. I like to think of it like the economy is on training wheels, like a kid riding a bike, and it's been this QE and this stimulus, low interest rates that's been holding the economy up. And once you take those training wheels off, the boy's going to fall over. Okay, the economy is going to collapse once you take these training wheels off.
But he could keep riding on the training wheels for a long time coming, and that's always my position, which the guys know. They can keep this going for longer. What makes us think that now is the time that the training wheels have to come off?
They can't. I disagree. I respectfully disagree. I don't think they can keep it longer because look what's happening with
You can troll
inflation.
me.
Yeah, that's right. Yeah, look what's happening with inflation. You think people can afford this? Like people look at 7%. They don't really understand how bad it is. What that means is your rent's going to be double in 10 years. Your groceries are going to double in 10 years. Housing costs are going to double. You think people are going to be able to afford that? No. And we're already seeing unrest starting to rise because of all these social issues. And I think it's only going to get worse. And we really saw the Federal Reserve flip in December when it started to become a political issue. And the Federal Reserve had a meeting with Joe Biden. I think he kind of, even though the Federal Reserve is meant to be independent, he kind of hinted, look, we need to start doing something here. People aren't really happy.
So this then leads into another question I had is, what are the signs? Do you reckon this is part of the signs of the recession?
No, I think this is what leads to the recession. The signs that's going to go into recession is consumer confidence going down, which is happening with what's happening with consumer debt. I think these are the signs of what's going to lead to a recession. Also, the supply chains. Also, we have to look what's happening with companies' earnings. It was a very mixed earnings season in the US. Some companies did great. Some companies did poorly. But a lot of them did admit that, inflation is getting worse and the supply chains aren't going to get fixed anytime soon. And yeah, we're seeing really around the world, there's still more issues for the supply chains.
We're seeing that, but we're also seeing employment fall. We're
Hmm.
seeing prices, obviously asset prices are going up. People are getting on with what's going on. And I'm throwing another question at you. What if we don't have a recession? I'm always looking at the other side. Obviously, my view is we might have a recession, but I think we'll come out of it pretty well, and we boom into this next part of the 2020s. But what are the signs of if we don't have a recession and all this stuff was just fear and talk and noise, and we've already seen the major lows? How do we know that? Did we miss the bottom and then we have to just start buying at higher prices?
Yeah, well, look, I could always be wrong. It's always a possibility. I guess you could say maybe the Federal Reserve gets lucky, the supply chains fix themselves. Unemployment goes down to record levels, people's wages go up, and maybe they start going up higher than inflation. And maybe we do avoid a recession, and people can start affording these higher prices, and consumer confidence goes up. Inflation
Mhm.
lifts companies' revenue growth. So maybe that's a possibility we don't, but I think it's more likely that what we're seeing with the data is inflation getting worse. The Federal Reserve is going to have to lift interest rates to fight it. And also what you have to know is the stock market and the markets overall, they're not the economy. Just like what we saw in 2020 when the economy was in the toilet, asset prices skyrocketed because of the cheap credit. And so what could happen is maybe we don't enter a technical recession, but I think we're going to be facing stagflation. So we go into stagflation, and yes, maybe, like I said, we don't enter a technical recession, but we could see a sell-off in the markets. And what I'm more worried about as an investor is what happens in the market.
As an investor, exactly. So that's what I was looking at for 2020. I was going on about the market recovering, and it started to look like we got a very strong V-shaped recovery while the bears were out there saying, no, this is over. And then the story started to switch from the asset prices don't matter. It's what matters in the economy. But since then, it's 2 years now, nearly 2 years, a month away, that the prices have kept going up. Sure, the economy doesn't look so good. People aren't in the greatest situation. But as an investor, the prices are still going up. How do you reason those two pieces? If people are having a harder time, this could keep going on for for more years to come. Why does
So
it
you
have to be now?
Well, I think the markets are going down. We've seen start to the year, the Nasdaq almost
Yeah.
entered a bear market, nearly down 20%. The Russell entered a
Yeah.
bear market down 20%. The S&P 500 did hit a correction. It's not going to collapse overnight. What I think,
Sure.
anyways, in my opinion, there's going to be a lot of volatility, but I think we are actually already on that downtrend.
I guess that might be the difference for us. We have the downtrend, but when we're looking at the longer term, which leads me maybe to the point here, thoughts of second half. How long do you see this playing out? If it is a recession and we have a bad period for people and the economy and asset prices, is this a 12-month sort of thing, or is this like a 3 or 4 year sort of thing, like we saw post GFC?
Yeah, well, that's the question everyone wants to know. And unfortunately, I don't know exactly. Nobody can predict how long a recession will happen before it actually happens. What I like to do is continue to look at the data, continue to monitor the data to see what the trend is. But what I think is, if interest rates do go up, we do enter recession. I don't know how they're really going to be able to get us out of this one because they've already used so much of their tools. And really, if they do have to react to get us out of the recession, then they're going to have to print 10 times the amount of money that they did in 2020. Because if you notice a trend, every time we have a recession or financial crisis, they have to print 10 times the amount. Like in 2008, they did bailouts of 800
I think
billion
800
to a
billion. Yeah.
trillion. Yeah. And now this one, they've done tens of trillions. So wait till you see the headlines, that the Federal Reserve announces, QE unlimited and they start printing the hundreds of trillions. That's when we could see, I guess you could say, I think it's kind of like what Phil Anderson, is it Phil Anderson?
Yeah, yeah. The
Yeah, I think
18.6 year cycle. Yeah.
yeah. So maybe this could, I guess what I could say, what I could agree with, this could be kind of like the first wave. They react to that, create too much currency. It could lead to hyperinflation or loss of faith in the currency. And then we could see an even bigger collapse, I guess you could say, in round two. Kind of like what happened in the Great Depression. There was actually recessions before that and small depressions before it led to a huge sell-off in 1929.
So I have two other things with that macro picture. If we're just looking at short term, what happens this year, not too sure, but maybe the macro. And the other thing we haven't factored in as well is credit creation from the banks. Like we haven't even started really with the credit creation here compared to what we have seen in the prior cycles. GFC, which was 2008, but leading up to that, we had 2003, 4, 2005, 2006, 2007. It was just create credit. We haven't seen that yet. And so there's still a lot more money to come into the system. I guess that's the first thing. Your thoughts on, say, credit creation. That's one reason why I still think the cycle has a lot further to go, several more years, and big asset prices to come. I'll let you answer that first.
So what I think, in my view, is we've already had the crazy credit growth. Sure, it may not be as bad or as wild as 2008 during the subprime mortgage crisis, but we did have a huge credit boom in 2020. Credit card debts at record levels. People took on huge amount of debt to bid up property prices. And now what we're going to go into is rate hikes going up and mortgage rates going up. I think mortgage rates hit a low of about 2.7% in the US. Now they've actually gone over 4% and they'll go much higher now that the 2-year treasury yield hit about 2.06%. So in my opinion, I think we've already had the crazy credit growth, and I don't see how we're going to have a credit boom in a rising interest rate environment.
Well, we had that last cycle, and that seemed to work out towards the end of the cycle as well. So it's not to say that I think there's another 10 years of this thing left. It might be another 4, 5, 6 years, but we haven't seen any interest rate rises just yet. Sure, there's one around the corner next month, so they say. That really hasn't started to put a stop on things. So I guess that's a difference in opinion of how we're viewing this part of the cycle. Or
Yeah.
is this the end of the cycle for you? Whereas I'm still seeing it as the mid. We're coming out of the mid cycle. So looking at the macro, what you like to do is just look at the macro sense. Then say we skipped 12 months from now, what does it look like? What does it look like in 2023?
Yeah, well, I think in 2023 will most likely be in recession if inflation doesn't go away and if interest rates going up. And I think, yeah, that's where we're going to see the slowdown in credit, because what fuels credit is low interest rates, cheap interest rates, and interest rates have already started to go up in Australia for our Australian viewers. A lot of the banks are starting to hike their fixed rates. And again, in the US, they go off what the 10-year does. So even if the Federal Reserve doesn't lift interest rates, the bond market tries to price it in before it happens. So the 10-year yield actually dropped to about 0.6% in 2020, where now is about 1.4% higher. So it's the bond market trying to price in these future rate hikes before it actually happens. So when the Federal Reserve starts lifting interest rates, the markets may not actually sell off immediately because they're already trying to price it in now.
So that leads into the final thing, which is how we can actually use this information. You have your views of what you're doing. I obviously have my views. So how are you investing in 2022 and 2023 with your outlook?
Yep. So what I'm doing is I'm just patiently waiting on the sidelines. I've been storing cash, building my cash position. Now, some people may say, "Why are you doing that during a high inflationary time? You know, cash is trash," and that's
Yeah.
true over the long term. But in the short term, say for example, even though inflation is 7%, if I think stocks are going to fall peak to trough maybe 30 or 40%, well then that means I'll still be 30% better off than if I just put my money in the markets. And inflation is good for assets until central banks actually start fighting the inflation. So we're seeing the build up to it. It's been great, especially with what's happening with Bitcoin. But now that central banks are starting to fight it, as I think, in my opinion, asset prices are going to go down. I'm building cash. And also, what I'm doing now is I'm starting to dollar cost average into gold a bit, because what happens in gold when the markets are euphoric, it doesn't perform well. And it hasn't really performed over the past 10 years. So people look at that and go, well, it hasn't done anything in 10 years. But what it did before that, before the previous 10 years, is it went up nearly 500%. So I think if we do enter, an Armageddon like scenario or a big sell off, people will flock to gold, like what they did in 2020. And I think in the short term, we'll probably sell off with the stock market and with other assets if the dollar goes up, like what we've been seeing. But I think it will perform well. And what I'm waiting for to, turn from bear to eternal bull, turn bullish.
Yeah.
I'm waiting for Bitcoin to hit around the 25K mark for me to start dollar cost averaging. Because remember,
That was
I'm not trying to time the bottom, but I'm trying to get a range. So I think there's a range where it could fall anywhere between 25 to 20K, who knows, maybe even lower. And with stocks, I think they could fall anywhere between 20 or 30%. So I start to dollar cost average in that range. So yeah, I won't time the bottom perfectly, but hopefully I'll get a good chunk.
That was going to be my next question. Just the old, what do you think the Bitcoin price will be in 2022? So somewhere between that sort of 20 to 25 ish. I'll ask the viewers if they could leave flags in the comments section, where you're from, drop your flag, your
Mm.
country down there. Because I just want to say thanks to Michael and, show respect. We have differing opinions, but if we don't have differing opinions, then the world can be a pretty boring place and we'll never learn from each other. Appreciate it, man. Yeah, I'll love to have you on the channel again. For Bitcoin, I think maybe we'll see what happens this year for that. Obviously, I have a different view, and I've talked plenty of times on your channel, which you can find the links to Michael's channel in the description down below. Any last words, man?
No, I think we've covered everything. And yeah, I guess time will tell. We'll see what plays out, and if any new major news comes out or any new developments, we can always update our viewers.
That's right. There's always a changing view whenever the information comes out, how we're playing the market. So thanks very much, man. See you guys at the next video. Catch you later.